Let's jump to Standard Bank. I keep on shutting that down every time. So Standard Bank, we're in. Let's see. So I'm just eyeballing. The trick with an EMA is in essence what I call a dumb stop loss, and I'll show you why now as we pull up the Standard Bank chart. So technical. This is where you find them. There's my MACD. I want EMA. I want only one EMA, please. I don't need hundreds. And I want it to be, let's try the 15. I'm going to pop a second in just so we can test a 30 as well. See if we get a little bit better with either. There we go. They're both in place. Now, your 15's at about 136, the others at about 132. The point with the 15, which is that first EMA, the top one there, is that a pullback to that sort of level is fairly, not going to be unexpected. And it kind of takes you into that zone. And I wouldn't want to be exiting in that zone because I think we're actually going to find some support there. So we might drop a bit below it. And then we get ourselves stopped out. And that's what I mean where it is in sense. It's a dumb stop loss. To me, where would you want to do it? If you want to be aggressive on your stop loss, you're going to put it sort of just below that zone at maybe around 133, 134, which would put you just around about there. That could be an aggressive positioning for a stop loss. I'm not going aggressive with these stops at all. I'm working the theory that we're taking it gentle. We're entering on a weekly chart. We want to give it time to do some running and to see how it goes in particular. Folks, those are the ones that caught my attention, but there's a bunch of others, and I'm going to run this webcast, so I'm not going to be in a hurry in any sense. There's a bunch of others that sort of popped up, so I'm going to run through them. If you've got questions, drop them in the Q&A box. If you've got a top 40 stock you would like to have a look at, absolutely, let's have a look at a top 40 stock you would like to see. Loading up Barclays Group Africa here. Again, let's drop back to my weekly. So that's what attracted me on Barclays Group Africa. So the MACD is confirmed, but the price hasn't, because that's where, so when the MACD first confirmed, it was there, that point there, nice, but I put my entry at about, what is that, 165, and we're waiting, we haven't yet. All we have had is sideways movement in 165. At what point would I cancel this and call it, no longer interested in the trade? When my MACD turns down. When my histogram goes red, then I'm no longer interested in the trade. For now, BGA above 165, absolutely. Let's take out Standard Bank. Let's put BGA, 165 equals entry, stop equals, where am I going to put my stop? I'm pretty sure I know where I'm going to put my stop. Yeah, I'm going to put it down there at around 130. Stop equals 130. That's a little far. That's almost 20% away. If we're not going to put it there, then I'm going to want to put my stop. I'm going to stick it around there, which is around 143. I can live with a 143 stop on BGA. So there's another potential one coming up. Let's pull Discovery. So the one I looked at, which I thought, hey, Richmond, because Richmond's been sold off forever in a day. But as soon as we pull the Richmond chart, we can see we're a million miles. Patrick, would it be considered too late to get into Standard Bank at this stage? Short answer, yes, because our entry was a fair bit behind us. We've, the trade's nicely in the profit. And the point is, another one will come along. So missing a trade, I'm never going to want to jump into a trade late and after the event. So Richmond turned. I mean, they're technically a turn green in us, but it's just been looking fairly ugly. Where would my entry be? So that's a daily. I want a weekly. See what I mean by making the mistake? My eye catches it. So Richmond is. So Richmond seems to have found some support down the low 80s. Disclaimer, I was buying some Richmonds yesterday at 83 and change. We need that MACD to turn. And because we're in a weekly chart, it's going to take a little while before it starts to turn. Let's go pull up, Minaj is talking Old Mutual. Let's go have a pull up of Old Mutual. Old Mutual did pop up on my list, did it? It did. Mutual, we're on weekly. So Old Mutual is kind of saying to us, I mean, histogram, Okay, so histogram is green this week. We need it to be green for Friday. So first we want that histogram to confirm through to Friday, assuming it does confirm through to Friday. And I hate assumption. I absolutely hate assumption. I would put my entry at around about the 42 Rand level. Stop loss is nice and easy. Stop loss I would put round about the 36 level, but first let's wait for it to confirm something for us. I want to drop down to daily to confirm that stop. Like it. Old Mutual first has to give us a decent close this week. More questions coming in. Sassel. Luke, someone was going to ask for Sassel. And if you weren't, I was going to show it to you anyway. Rory got your question on Braid. So what you'll notice, and you'll see it on Sassel, and then Rory will come to Braid, and we'll see exactly the same thing on Braid. So we go ourselves to a weekly chart, and the short answer is ugly. So MACD is down, has been since, well, it was last green. No, it was last green in May. So June, July, it's been going down. We needed to turn. We absolutely needed to turn. So we could look at Sassel. We'll look at it when we do our reversal patterns in September, depending where it's playing. But at this point, so we've got Sassel, and we say, you know what, Sassel, love you or not, as the case may be, but no thanks. Yeah, not playing with you today, not interested in the party at all. Brait, which was Peter, yeah, so long-only trading plan. And the reason why long-only trading plan is because, firstly, stocks spend more time going up than they do going down. And secondly, because on the downside, stocks are so volatile that it just it's just not worth the effort. It's just too volatile from the downside. We get stopped out, things goes crazy. There's just no particular point to it in that sense. So, just long only in the process. To my mind, short trading, yes, when you get it right, great fun, but man, it's hard to get right. So there's Brait. Same story. Seems to have found some support around the 120 level over the last month or so, since Brexit pretty much. But we haven't had a positive histogram. So we had some positive histograms back there. No, we didn't. We had some positive histograms back in November of last year. And you will note that when that happened, it started to go sideways. It just started to go absolutely nowhere. Graham, you want EOH, notwithstanding, as you point out, not top 40, but let's go look at EOH. So I went top 40 for pure liquidity reasons. You could expand it beyond top 40. You could take it into a wider market. But then, to me, I like the liquidity in the top 40. I'm quite happy with trading that. So here's EOH. So histogram went green back on 4 July. So I'm going to change my date so we are not cheated by what we can see. So there was my histogram going on EOH. Where do I put my green line? Probably be a little aggressive on it. Put it at around 153. Drop to a daily. And my other line has completely disappeared. It's completely disappeared because now that we've come forward in time. So there was my entry all the way back there somewhere. My stop loss is probably going to be somewhere around, well, at this point, around the 136-ish level. But really, we needed to start playing games to stop playing games and to start stop loss around 135. At the moment, it's going nowhere. It's not doing anything for us. We needed to come to the party and give us some help in that space there. Maria, I'll get to Steinhoff now. Have I done back testing? So I did. So I don't do classic back testing because of the way to program the back testing is not practical, because what you can't do is give yourself programming where I'm doing the lines and the like, because the lines are obviously eyeballing it in a sense. But I went and eyeballed over a couple of years, picked up some trades, etc., and a couple of things popped out at me. So we're averaging about 2 trades a month, which is about 24 trades per year. We're of that ratio, we're averaging 16 winners and 8 losers. The losers were losing us ungeared 8%. Obviously, the gearing comes into that. And the winners were making us, again, ungeared around 21%. So we had a 2-to-1 win-loss ratio in terms of we win twice as many trades as we lose, which I think is quite high. And I'm not sure that we can sustain it. That's a 66% win-loss ratio, and I think that's perhaps overly high. I think in time it might shake out, and that shakeout might happen when we have a bad sell-off, a bad bear market. This was done over the last last 3 years, pretty much a sideways market. So I think that'll shake out. And our win ratio, when the winners were 21, our losers were 8. So certainly we were ahead. The system works. The trick is we need to trade it through a bear market, which could be a heck of a long time. Christia, could you use this to identify shares I'd like to buy and hold forever? Christia, absolutely. So, and this was one of the conversations I had with someone after the event at IG last month, where, so you like a stock, and we'll come to one Steinhoff in a moment. So Maria is asking about Steinhoff, a stock that you say, okay, I like it, it's great, I want to own it forever. Let me find the most opportune time to be buying it. And then you use this to get you in. So in other words, you're doing it for your long-term buy and hold. What you're doing is you're blending technicals and fundamentals. And if you go to our last bootcamp session, we did exactly this. So we said, okay, let's first identify the share on your fundamentals, whatever that might be. And then you come along and say, now let me use some technicals to identify the entry. So Steinhoff going nowhere for at the moment. Histogram is still red in that space there. We need the weekly histogram to turn up for us. Graham, I see your question. I'll come to it in a second. Average holding period of profitable trades. So, Keith, it's a great point. Your average holding period of profitable trades was around about 8 months. So your question is, does the long interest erode much of the profit? And no, and here's why. So short answer, it does. But here's what you're doing, is you're only gearing the portfolio to 2 times. So by gearing the portfolio twice, what it means is that you've only, and we've got the example here of a 50,000 Rand portfolio, you're gearing it to as much as 100,000. But when you're into 100,000 in terms of exposure, your margin on that 100,000, and if you look at these 2 trades that we're already in, and I'm just going to use them as our example, these 2 trades, margin is 500 on the one and 1,000 on the other. So we're 1,500 Rand geared. We're probably only ever, we're unlikely to go up as much as 10,000 Rand of our portfolio as margin. So yes, we will be paying interest on 100,000 when we're fully in, right? Because that's how much money we have exposure to. But we're receiving interest on 40,000. If that makes sense. So because we were receiving that interest on the 40,000, it offsets. It doesn't completely negate, but it offsets. At this point in the equation, we have got 48,500 cash in the account, 1,500 in margin. Actually, we're receiving more interest than we're paying. And that was one of the critical points of designing the system and putting it together, was if you're going to hold positions for as long as 8 months, and some of them, one of them, and I can't remember which one it was, ran for 14 or 15 months, that interest becomes heavy. So then you've got to make sure that you manage it. And it's how the pieces all fit together. I don't want to overgear a portfolio anyway. I would never push a portfolio more than twice geared, 3 if I was feeling, absolutely, I don't know, like a crazy trader. Would I gear my portfolio as a whole 3 times? In which case, it leaves that large pile of cash. So because we pull portfolio gearing down, that reduces overall portfolio risk. At the same time, that happens to have the impact, more cash in the account, earn interest, offset on the cost. If I want no gearing, so you can absolutely trade this with no gearing.